Hi everyone, again, I'm Karol. I'm a postdoctoral fellow at the University of Oxford, and this is a joint work in progress with Georgios. He's finishing his PhD now at EUI, and he's also in the chat, so you can also ask him questions if you need to. So this is a project in which we want to study interaction between land and insurance markets in rural Ghana. Land is a very important natural asset in Ghana. Almost half of the Ghanaian labor force is in agriculture, and as is often the case in developing countries, this agriculture is mostly done on a small scale with low mechanization and so on. However, what is one of particular aspects of agriculture in Ghana is that it is characterized by a strong overlap between customary and statutory land laws. Until recently, until even today, we see that around 80% of land is held under customary land laws, and there are surveys showing that Ghana is one of African nations with highest role of informal chiefs or tribal leaders. At the same time, as is often the case also in other developing countries, government does not provide many formal insurance programs, and these societies have developed their own informal insurance channels, taking often forms of reciprocal transfers between friends or family members. So in this project, we want to study, answer the question, how does land formalization or land titles affect mutual insurance and land reallocations in rural Ghana? We think that this is an interesting question because land formalization may give rise to two opposing effects. It may give a positive stimulus to land fluidity and hence align incentives for investment and improve allocation of land. But on the other hand, it may also hinder incentives for voluntary cooperation over other margins, such as mutual insurance networks. And we want to take a look at this in this paper. So we approach this question both empirical and quantitatively. And for the empirical side of it, we use two waves from 2009 and 14 of Ghana Socioeconomic Panel Survey. It's a rich panel with data on both household and plot level. And this gives us a lot of room to play with it. So I want to show one key empirical result that we derive. This is an extended consumption smoothing test in the spirit of Townsend. And here we have individual consumption on the left-hand side, and we regressed on income, share of land in the village with selling rights on it, interaction of these two terms, and average village consumption. Because this average village consumption takes controls for aggregate shocks affecting these households, we can interpret this coefficient here as an elasticity of consumption with respect to idiosyncratic income shocks. So we see that this number is very low. If this was 0, then this could indicate perfect consumption smoothing. If this was equal to 1, this would mean a perfect pass-through of idiosyncratic shocks. But what is more interesting is also that we find that selling rights increase the level of consumption, but more importantly, that this interaction is significantly negative, which means that improvements in land formality are associated with improvements in elasticity of consumption, meaning that the risk sharing can be improved. So this is a new finding in this literature. We document some other associations of land formality with different margins of economic life there. So for instance, we find that higher degree of land rights is associated with declines in the number of disputes due to multiple claims over land, and we take it as indication of improved land security. We find also that this increases intensity of land reallocations within communities, and also that this reallocations that are not only more intense, but also more efficient, as indicated by increases in aggregate productivity and consumption. And finally, we find, as I showed you, that there are improvements in risk sharing. We think of this as improvements in risk sharing, not in self-insurance, because we also see that there is very little savings that these households have, and that they do not respond to degree of land rights. So we construct a dynamic quantitative village economy, which rationalizes our findings. So I will quickly outline the setup and show three key results. So we have two ex-ante homogeneous risk-averse households. Time is discrete and infinite, and crop output depends on aggregate shocks, idiosyncratic shocks, and on the amount of land chosen in the previous period. Importantly, land is a common good and is in fixed supply, and it has to add up to one in every period. And because we focus on this ex-ante homogeneity, we allocate initially equal amount of land to both households, and we think of this as an inherent land allocation, which you can think of as a land that has been cultivated by the family for many years, and therefore broadly in broad sense it can be thought of as an inherent land of this household. So this economy has two motives for cooperation: over mutual insurance of idiosyncratic shocks and over as efficient as possible allocations of land. And we subject this cooperation to limited commitment constraints, meaning that in all period states and all farmers have to be weakly better off cooperating than deviating to the non-cooperative equilibrium. So importantly, in the outside option, we assume that the deviating household will keep share psi of the inherent land allocation and 1 minus psi of the recently allocated land by the village planner, chief, or whoever. So psi is a measure of land formality in our model, and it can be chosen ex ante by the planner. So what we find is that increases in land formality affect heterogeneous farmers differently. Productive farmers who will on average have more land than unproductive ones, they will be losing incentives to deviate, while unproductive ones will have the opposite dynamic. So what happens here is that as we increase the land rights, so in these plots, you see average village consumption, elasticity of consumption, and correlation of productivity with land allocation. Green line is a outside option, autarky. Blue one is the first best, and red one is the limited commitment contract, the benchmark model. So what we find is that the correlation between productivity and land increases towards the first best level. This has reflection in increases in average level of village consumption, and also this is associated with improvements in risk sharing as indicated by reductions in elasticity of consumption. But what is important is that after some level of land rights psi around 0.4 in this example, there is no more cooperation that is sustainable for these parameters. So what it means is that there is a level of formality after which farmers may end up in a worse non-cooperative equilibrium, and therefore this may be an endogenously kind of chosen level of formality that prevents full formalization. So in our empirical work, we show that formal land rights may have broad implications for other informal institutions in rural societies. Our quantitative model formalizes this and gives potential reasons for low take-up of land rights, and we want to use our quantitative framework to do some further work in the future. So I will finish now. Thank you very much, and looking forward to your questions.
Thanks. That's really interesting. I like the way you're sort of tying the outside option to the land rights you've got here. That's a nice twist on these limited commitment models. I have a sort of question, which is it's kind of not a very interesting question in a way, because it's about the motivating piece here. So you find this correlate. You have this result that argues that there's better insurance in places that have these different sets of different claims to land. You say, I couldn't quite tell from their presentation here. In Townsend's original paper, he assumes exponential utility. Other people who have sort of followed and done similar stuff have tended to assume constant relative risk aversion here. But the argument that there's less or more or better consumption smoothing, does rely on the assumptions you've made about the form of the utility function.
Yeah.
And something I had, in the paper I had with Thomas and Worrell, we had problems with CRA utility and sort of predicting levels of consumption in a way. And I wonder if you might have a similar issue going on.
So for what I've shown you, this is a simple parameterization. We haven't done much of exploration here yet. We've assumed simply a log utility. So I haven't investigated other utility functions, but I mean, after you make me aware of potential problems, I think I should.
I think we should just delegate to Ethan the discussion of the paper. Actually, it's hard to think who else would be better positioned, but I think the question on formality of land rights and the sort of, I think there's a kind of bigger macro policy or macro oriented question here. You know, I'm looking at Marcus, who's also in this room, who's been thinking about how land might matter, and we have this macro literature talking about formalization and land markets being key. Am I right in thinking that what you're suggesting here is that there's an interesting trade-off between the formalization of land, which might create some efficiency gains on the one hand, and the potential loss of incentives for informal insurance networks on the other? And is there a way to put those things together in a sense, and to there'd be an interesting question here and seeing how you can, what the aggregate welfare impacts are in a sort of dynamic sense of trading off the insurance benefits against the efficiency benefits or the productivity benefits.
Right. I mean, this is what we are after here. So what we don't have is that we don't have this empirical evidence that there are communities which actually are on, let's say, on the higher end of the land formality, and who become worse off as the land formality increases even further. So this is what the model predicts, but we don't have it from the data, because from what we've seen is that these formalizations is taking from, it's starting from a relatively low level. So there is not really many villages in the let's say right end of the distribution. So we cannot do much here there yet. There's a hope that maybe with the release of new third wave of the data set, maybe there will be something more happening there. Maybe we could try to provide more evidence for these predictions of the model.
I guess the other question I would have is, it seems that in this economy, there's a real incentive for people to develop other mechanisms of insuring and not relying on the village insurance, but either formal mechanisms or perhaps different types of savings or asset accumulation that would give them some self-insurance. And again, I wonder if that's something you can look for in the data, perhaps. There's certainly people trying to sell insurance of various kinds, health insurance and weather index insurance up and down in Ghana. I don't know how successfully. My sense is that there's relatively limited take-up of those.
Right. So I know for sure that there is data on insurance assets such as livestock and savings in banks and at home. I don't know about more involved products as you mentioned. I mean, might be also something interesting here to look at.
Yeah. So Marcus is clearing his throat, so to speak.
Let me just,
let him jump in.
Let me just second Doug's comments. And I think it would be important also in the model to see more like how availability of other insurance affects things. And you could measure stuff like the willingness to pay for other kinds of insurance products in the model, right? And that would be interesting to relate to the literature on low take-up.
Okay, so you're thinking mostly about weather insurance or what other?
Well, one thing is weather insurance. The other thing is other ways of having social insurance within the village, right? Yeah.
So what would be something else than a reciprocal transfers here, like consumption good exchanges, or?
Yeah, for example. So I just wonder whether exactly the way you've set it up with the land matters precisely for the results. But it's really fascinating.
Thank you, Colin.